Hi, I'm Jeremy Jawish. I'm the CEO and the founder of Ship Technology. Ship provides insurers an artificial intelligence platform to help them take better, faster, more accurate decisions through the life cycle of their customer trip.
Thank you for coming in, Jeremy. Lovely to have you. So I think the topic of discussion today is about how AI can drive efficiencies for insurers, especially those insurers operating in the UK general insurance market. And I think one of the things that we've all seen in the news this year is that it's an increasingly competitive financial environment for those insurers, with combined operating ratios on average reaching above the 100% point, to the point where claims costs are overreaching the profit that insurers are making from underwriting. So I think what's really interesting from an AI company's perspective is to explore how that AI can drive efficiencies in those processes and create better core operating ratios for all those insurers. So I mean, maybe you could just speak to that for me.
Yeah, so we're seeing a drastic increase in combined ratio in the last quarters, and we even qualify it as we're witnessing a crisis in combined ratio right now. Because three main factors is the first one, it is still a very competitive market where any premium increase is having an impact on competitiveness of insurance companies. And then on the other hand, you have a big increase in inflation, which is happening across all sectors. That's driving the claim loss and the claim costs to levels we've never seen before. And then on the other hand, also we're seeing an increase, and it's not in the last quarter, but in several years we're seeing an increase in natural catastrophe events, where climate events are having a huge impact on claim loss that on levels we've never seen before. So if you combine these three things, insurers are seeing a drastic increase in combined ratio, and our job and our mission is to help insurers to tackle that with artificial intelligence.
Great. So as you mentioned, with the economic environment for UK general insurers at the moment, it's increasingly competitive, and it's an issue of 1 or 2 points off the combined operating ratio can really be life or death for a lot of these companies. And I mean, maybe if you could just speak to me very quickly about how the factors that are driving the economic environment that are making it so competitive for insurers to operate in this space.
Yeah, so the economic environment we're seeing in the last quarters have really driven inflation up, and cost of repairs going up, parts of cars are going up, prices are going up, housing repairs going up. So every single part of the claim loss that insurers are paying every day is going up because of inflation, and this is being driven to levels we've never seen before, at least in the last 20 years. And combining that with a constant increase in natural catastrophe events, we're at a level today where insurers are struggling in keeping the costs under control and predicting how the cost is going to change every quarter over quarter. And on the other hand, the competitive market in terms of the UK competitiveness of premium is not going away. And insurers were betting on the fact that inflation is going to also drive price increase, but we're seeing that it's not totally correlated, and we're still seeing a price war on the premium side that's not reflecting the inflation and the increase in claim loss on the other. And this is where insurers that have been focusing a lot on automating processes, let's make it simpler, let's spend less on handling claim, realize that there's so much you can do there, while you should start tackling this claim loss, spearheading it, where let's try to see if we're paying stuff we should not pay, if we can take better decision at every touch point of a claim in order to pay what's really should be paid, rather than having leakage on paying claims that are not covered. Not finding the right subrogation opportunity and paying claims they should not pay, that a third party should pay, or even fast tracking claims where there's a suspicious activity behind it, or even fast tracking claims where when you look at details of the loss adjustment report, you can see that there's some inconsistency between things that being claimed and the circumstances of the claim. So these are examples of decisions where if you're able to take better decision at this touch point, you're able to not pay claim that you're not supposed to.